This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. So let me tell you, first off, I want to read a quote from Malcolm Gladwell, the author. My goal of the day is to fully listen to my critics, even if they may not know exactly what they're critical of. Love it. I love it. So, I also want to kind of just add some clarity to, dusting the dirt off my shoulders, so to speak. And I was looking up the exact definition. And there's a couple different ways it could be interpreted. There's an interesting donkey parable about being buried in a well, about dusting the dirt off your shoulders. But I think the one that I like, the one version that seemed to make the most sense for me was, as more people hate on you or become envious or angry at you for whatever reason, the dust accumulates into dirt. And soon you got to dust that dirt off your shoulders. So that's my setup here. And you'll see where I'm going with this. So yesterday I find an article, Jay-Z, kind of slamming Occupy Wall Street. I went to Occupy Wall Street events here on the West Coast, and I saw a bunch of people that were seemingly lost, and they did not know what they were really doing or what they were complaining about. A lot of them had not showered in a long time. And the first book that I saw at their book selling event was the Communist Manifesto in Spanish. And now, amazingly, well, maybe not amazingly, but the press gave a lot of these folks a green light that somehow or another they were on to a good path. And, eventually we saw what happened. And not surprisingly, we never heard from Occupy Wall Street again once they cleared out the park in New York City. Well, Russell Simmons, the big producer, the big hip hop producer, was a big supporter of Occupy Wall Street. And perhaps he had noble reasons and whatnot. But the article yesterday from Jay-Z was great because he basically came out and he said, I don't know what this is. What can we go into a picnic at the park? He's like, there's too many messages. He goes, at the end of the day, just hating on rich people, that doesn't make any sense. America is the home of the dream, the economic dream, the entrepreneurial dream. And so I thought it was great that Jay-Z made that comment, and linked to it on my website, and thought that was really interesting. So, not surprisingly, though, to post a Jay-Z inspired entrepreneurial article on my website and lead with it, somebody commented last night, and they said, Jay-Z nails it, really, from you. Goldman sells shit to people who should know better, and you're outraged, but a scumbag dope dealer is an entrepreneur, ? I looked up the IP, somebody that apparently knows and loves me that lives in Los Angeles. I don't know whether that person is an angry liberal because Occupy Wall Street got criticized, or an angry conservative because they don't like Jay-Z's African-American success story. But it just kind of struck me. I was like, wow, how can you really argue when a guy comes from the situation, the place that he was at, not dealt a pretty hand in Brooklyn, and, self-admitted drug dealer growing up? Of course, we all know who buys most of these drugs these days in this country. It's not just the folks that live in the inner city that's selling them. And don't put me off onto a tangent about drugs, because if we're going to sit around and talk about the fact that marijuana is illegal, boy, you can walk in almost any supermarket these days and buy yourself a bottle of Jack Black, which is killing more people. I'm off on a tangent, of course. But the point being, you have to admire somebody who, you have to admire someone who comes from nothing, like Jay-Z, basically, and turns it into hundreds of millions of dollars. And for my fine critic to come onto my website, and remember, kind of going into the meaning of dirt off your shoulders and the Malcolm Gladwell piece about trying to understand critics, but for somebody to kind of come in and just hate like that and say, okay, guys, a scumbag dope dealer, I mean, clearly the man has moved well past that. So I guess I want the controversy. I want some of the angry nut jobs to come into my world and let them explain themselves. I do find the interesting thing, though, is that, and I'm not sure if the audience knows this, and I've only hinted at it over the years, but I've probably got just about every email that's either come in or gone out from me in the last 10 plus years. And I can't tell you how many people, and we're talking sometimes friends, will use aliases, will disguise themselves. And in one sense, they're sending you an email as your friend. And then later on, they're sending you an email disguised as somebody else, or at least they think of themselves as disguised. There's not much disguising on the internet, folks. And if you're dealing with me, if you're dealing with Michael Covel, I kind of know, and I'm not the only one that knows. So I find that interesting. And I would theorize based on instinct, intuition, and past experience that whoever made that comment about Jay-Z and trying to imply that somehow or another I was supporting a scumbag drug dealer. Of course, I'm supporting Jay-Z's comments about Occupy Wall Street. I support and celebrate his success. But I bet even money that the person that posted that on my blog is probably somebody at one point in time, or maybe even still, has held themselves out as a friend to me. There's a really snarky, troll-like version of person that exists these days. Technology has allowed something to happen in culture that we don't often discuss, or is not really being discussed, whether it's the snarky reviews of people, products, places, whatever, whether it's just the anonymous trolling. It really has allowed the angry loner in mom's basement, so to speak, who maybe life success has passed them by. It's given them an outlet. And I think the average person would be surprised at how much time the angry loner actually spends to make anonymous worlds up, to craft messages. I mean, I've seen it in my world. The numbers of people that have come after trend following over the years have been huge. Anyone that's paid attention, I mean, you can go into Amazon and literally some of the reviews just look, they're not even reviews, they're just angry people. And it's not that I'm sitting around reading reviews all the time, but you take in information and you see what the flow is and you see what's happening. But very few people like to fight. These kinds of people don't like to fight on the merits. The merits, for example, if we're discussing trend following or we're discussing Jay-Z, they don't want to fight on the merits. They want to connect some other straw man in. They want to make some other connection or analogy to throw people off. Because if you look at trend following, as I said, not many people have really come at trend following on the merits. It's the anonymous stuff. And look, I understand. I've put trend following out there with an attitude. I've put it out there with evidence. Just be aware. And so I thought it was an interesting opening. I thought the Jay-Z article was great. I thought his comments were great. I thought it was instructive also to come in with his classic song. Because ultimately, that's what we've all got to be like, regardless. Because everyone in this day and age, and trend following aside, just life lesson number one, everyone in this day and age is going to lose their privacy. You're gonna be attacked. That's the way it is. I feel like I've got a head start. I'm almost like Teflon these days. You know, what can you really say or do what can the critics say or do that's going to really cause me discomfort? I mean, I sleep like a baby. Anyways, just a side note. I'm going to take a little break here and jump right back into a discussion of trading systems. I saw a discussion the other day, and somebody was trying to talk about trends, and they were immediately saying to me, well, how can you detect a trend? You can't detect a trend. How do you measure a trend? And for anybody with a pulse, it's really simple. A trend is from point A to point B. There's going to be all kinds of different trend lengths, but You don't know the trend until it's over. So you enter, you exit, and then you can say, oh, there was the trend. So to some degree, I guess somebody could argue that trend following is a misnomer. I would say it's not, though. So, but to clarify, where does that leave us? So for trend following, it says you start with 5 basic precepts. What markets are you going to track, follow? You have to narrow the universe down. What basket of stocks? What basket of commodities? Gold, platinum, oil, corn, wheat. You have to narrow this down. Once you have it narrowed down, though, you have to say to yourself, what will be my signal to enter a trade? So I've got this narrowed basket of markets that I'm tracking, and you have to have a signal to get in. Something systematic, something where you have set rules. Now, momentum is a factor in life, in markets. It's there, it's real. So momentum factors play a role in entry for any trend following system. Real simple precept. It's not buy low, sell high. It's buy high, sell short, lower. It's buying the rising market and selling short the lower, the declining market. Basic idea. So you've got your portfolio you're tracking, you've got your entry signal, and then you've got to say, okay, well, how do I get out? I'm now in the market. I'm in whatever market. I'm in whatever position. Well, it's 2 different ways. You're saying, I'm going to get out. What's my rule for getting out with a loss? What's my rule for getting out with a gain? It's two different types of exits they're in place at all times. And with those 2 types of exits in place at all times, that's your governor. And that's what you can control, right? When you enter, you don't know how far it's going to go. You don't know what's going to happen. Maybe it goes to the moon. Maybe it's the next Apple. And you're just like, you're just sitting back and going, wow, I was so super smart to pick the next Apple. No, you just had a good trading system and you got on, you took the signal and it kept going up and you sat there. Great, man. That's awesome. But you can control the exits, right? You can control how much money you can lose. Now, the fifth element is the bet size. Everyone's got limited capital. So how much of your limited capital are you going to bet on each trade? Critically important. Are you going to bet 1%, 2%, 5%, 10%? You bet 10% on each trade and you get 4 or 5 losers in a row. Whoop. That's like a 50% drawdown really fast. Speaking of that, somebody had gone ahead and they were criticizing a trend following trader recently. And I think they were criticizing Bill Dunn, who might be in a 10% drawdown. And they said, and I made the comment about exits, and this person said, perhaps just to needle me, I don't know if they were serious or not, but they said, well, Bill Dunn doesn't know how to exit. Look, he's in a 10% drawdown. And I thought to myself, well, exactly. The 10% drawdown is exactly due to exiting. That is due to exiting. He's down 10% because he's exiting. He's not down 10% because he's buying and holding. He's down 10% because the markets have been volatile. He's been getting whipsaw trade. Remember the Ed Secoda whipsaw song? I'll play a few lyrics of that for a second here. Hold on one second. Let me just play a few lyrics from Ed Secoda's whipsaw song.
You get a whip and I get a saw, honey. You get a whip and I get a saw, babe. You get a whip and I get a saw. One good trend pays for them all, honey.
You get the picture? If you have whipsaws, small losses, those build up. So you get a 10% drawdown from actually following an exit plan. That's how you get it. And so this person came back and they said, okay, well, if that's what you're saying, well, then maybe the entries could just be random. Well, there's quite a bit of evidence and research over the years and many projects, people I know, and some research on this end where random entries have definitely been explored. You just randomly enter markets with the right exit strategy, with the right bet size strategy, and you randomly enter, you can actually make money. So my friend was right about to immediately say, well, maybe he's trying to say, well, once he understood my explanation for the small losses adding up to a drawdown, then I said, okay, well, and I accept your premise that why not just go random entries? But then the next point is, what if you can figure out something better than random? What if a slight momentum push, some type of basic reactive technical indicator, gives you more of an edge, more of a mathematical edge than random? You still have to stay robust. You still aren't trying to, have this super tight glove on your hand. It's about having a loose mitten. But if you can find something better than random, go for it. Usually at about these points in times, the discussion stops. And then people just walk away. They don't want to debate the subject anymore. But I think it's a good lesson for everybody else out there to think about that. Just to reiterate, trend following drawdowns, periods of loss, come from entering markets. The market goes the other direction, you get stopped out. You get an entry signal again, the market goes the direction you want it to go, you get stopped out. You add those up together, subtract them from your total account. Next thing you know, you're down 10%, 20%, whatever. I mean, it's what was the thing with, was it Daniel Day-Lewis? Was Daniel Day-Lewis the oil speculating film that was it Paul Anderson did? Gosh, I forget the name of it, but you guys know what I mean. But it's all about speculation. So think about drilling an oil well. You show up at California back in the day and you start drilling holes. Now you can go drill randomly. You can just start walking up and down the sides of cliffs and whatever and just start drilling randomly. But if you do a little geological homework, maybe you know where to drill to increase your odds. Same thing with trend following. Okay, go with random entries. What if you can increase your odds with the type of entry signal that gives you a little bit more of an edge? But I want you to think about the connection between wildcatting, speculating, and trend following. The idea is that you're going to drill a lot of holes. And some of them are just going to be dry. It's not going to be anything there. And then you're going to hit one, it's going to be a gusher. No one's going to remember all those dry wells that were dug. No one's going to care. That gusher is going to pay for them all. And then some. And then everybody will say, boy, he was a genius. He knew exactly where to dig. No, not really. He just covered, he optimized where he was going to drill. He knew a lot of them weren't going to work out. And then some of them did work out. You got a big home run. Boom. That's life. Now, you can also apply that mentality, and I think I've said this in some podcast interviews that I've done, but you can also apply that mentality, the trend following mentality of where if you have 10 trend following trades, 7 of them are losers. 6 of them are losers, small losses. And then the other ones are gushers that pay for it. Now, you can apply that type of thinking to other areas beyond looking at wildcatting for oil in California in the 1800s. venture capital today. I mean, as a venture capitalist in Silicon Valley, you have a portfolio in front of you. I don't know the exact specs or numbers as to how they would do it in terms of, I mean, I'm sure each firm is different, but let's say you take 10 bets. 9 bets bomb, 1 bet pays for them all. The $500,000 investment in Facebook for Peter Thiel, that looked like that one turned around pretty good for him. I don't know what he exited with that. But it's that kind of mentality. Look at Hollywood. Big film production house. You're going to fund 10 projects. You only need 1 to pay for them all. Maybe you want most of them to break even, and then you get the 1 gusher. Because you can't predict. Can't predict this. That's the whole point. So you can either craft your life around being a speculator, craft your life around looking for the gusher, pragmatically, with risk management. You're looking for that gusher. Craft your life around that. Or, in the alternative, you can call it Fidelity, call it Vanguard, give them all your money, sit back on the couch, and wait and see what Bernanke or the next Fed chief does for the next 20 years. And just hope that they have the timing of it set correctly for you, that when you retire, everything will be roses. That's your hope, right? Now, as you consider that as an option, the buy and hold Vanguard Fidelity option, you might want to take a look at the equity indices for other countries. It's one thing to look at the American indices right now at near all-time highs after a lot of Fed stuff, a lot of Fed action to get those markets up at those levels. Do you trust it? Do you trust it? I'm not saying that trend following is going to be the guaranteed winner. Nothing is guaranteed in life. But you got to say to yourself, what's going to let me sleep best at night? Always being on edge that this buy and hold system is going to have its legs cut out from underneath it, like in '08, which will surely happen again, or being in a position where you go against the grain, you go against the crowd, and you put yourself in a position that when the home run hits, you make a ton of money, even if your neighbor's not. And that opens up a whole different Pandora's box of emotions and feelings. Can you live with the idea of making lots of money when maybe other people aren't? Because the other people are just part of the herd, part of the sheep group, and they sit at the trough, and when the gruel is poured in, they sit down at the trough and they wait. If the gruel is taken away, then they don't get any, that kind of thing. So who do you want to be? What do you want to be? Which side do you want to be on? You got to pick a side. You can't hedge your bets. Can't be everything in life. You got to pick a side. You got to make a choice. You got to make a decision. Who do you want to be when you grow up? I know who I want to be. I'm very comfortable in my own skin. I'm going to add one last thing to this segment. And I've been writing about this because I'm starting to work on a new book project. And there's a kind of a slimmed down version of performance data book that's going to be coming out. But this would be a full new book that I'm working on. And I'm making a connection between being in the zone and then getting to the point where you can have a good system. And not to get into too many specifics right now, but I can think back to my baseball playing days and if I was in catcher's equipment for a doubleheader and in 95-degree DC humidity or hitting a home run, there's this feeling, this tranquility, this peace, this adrenaline rush, this zone, so to speak. And it's been a long time since I've really experienced it again, and I'm actually seeing it in yoga these days, which is quite enjoyable. But I think one of the tricks is that, in the beginning of this segment, I talked about the trading system, and I talked about from a trend following trading system perspective, you have these 5 different precepts that you have to look at. Once again, your portfolio size, your portfolio composition, what are you going to track? How are you going to enter? how you're going to exit with a loss or how you're going to exit with a win, and then how much you're going to bet on each trade. But I maintain, and this is what I'm starting to go in this new book, and I'm not going to really give specifics out because I think it's going to really go in a fun direction. But you gotta be in the zone first. You gotta have that mental side of the equation worked out. If you try and jump in and I see this with students sometimes. Students will receive material from my firm, and occasionally the first reaction from once in a blue moon is they don't know what to do, and so they panic. They can't relax, and they're impatient. And they expected, I don't know what they expected, money to jump out of a suitcase for them on the side of the road without having to do any work, without having to do any thinking. That gives a big picture of where I'm going and the details to come. Like I said, there'll be much more about that, and I'm actually going to try and get my Facebook posse involved in this process too, because I think there's a lot of feedback from a lot of very wise people that can add value to this next book. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.